I've been getting a lot of inquiries lately, and it's actually quite upsetting. It's been about the bounce back loans, not about how do I get them, but I can't pay them. So one of the things that I've got to say is quite often if a company gets into trouble financially, you put yourself potentially in front of the official receiver, and you can get questioned about what as a director, as your culpability is as far as the company not being able to pay its debts, and that's bad enough. But when it comes to the bounce back loans, they're guaranteed by the government, so the banks probably won't try too hard, although they should, to get the money recovered. But the government might have you in front of them because they obviously you're not just, it's not just a commercial loan anymore now. So the things to be aware of is that the loan was given to help people carry the business on. It wasn't given to pay your mortgage or buy a car or buy a boat. So if you are struggling to pay it back, the banks will listen and help you to maybe extend the loan. But I think maybe speak to your accountant, speak to me to just to double check where you are on things. I mean, I know I had a client the other day that he says to me, well, what if I borrow the money from someone else, pay off that one, and then at least I won't be in as much trouble when the company goes bankrupt? And no, you know what I mean? But there are things we can look at. Incidentally, when it comes to problems, financial problems, you've got to look at things in two ways. Is a business viable? So if you sort out the debt problem, is it viable to continue? Or is it like, COVID's put us out of business, but now things are going back to normal, we can get things back to normal? Or is the business just basically unsustainable? So then we have two different conversations, because there are things of short-term income generation. I mean, I know a little bit of a trend at the moment is to sell shares in your business, potentially to employees, and there's all sorts of tax advantages if employees buy shares in the business. So that's something to look at. Graham, you're laughing at me.
I'm not laughing at you. I'm laughing with you. It's just, it's just the timing. Then you won't know till you watch it back.
Oh, okay.
Me and Aidan timed it perfectly. Faded me in. I was going to jump in, and you were like, "Next segment, next story."
Let's go back.
So we were
struggling
giggling.
to pay bounce back.
No, we were giggling just because I was faded out again.
Oh, well, just let me throw another spanner in the works, because you know my dad makes bags and it makes all sorts of print. Well, he's made me these key rings. Look. Can you do something so people can see it?
Already done, my man. Okay. Already done.
So my dad makes them, but I don't know what you think of them, but he wants to charge me £1 each for them. Nice promotion, and we've got to do something because all this is expensive. We're going to keep the lights on somehow. So we make these videos and hope people will come and take us on board to do their accounts and look after them that way.
It's not just accounts, though, is it?
No, it isn't.
For people that don't know, Stephen's desk is there, just next to me, and I'm here. I edit the shows afterwards. Some of the calls we get, it's not just like, have you done me taxes or whatever? It's crazy stories about buying off him 10 years ago and then getting involved with this, and you're like, Stephen, fix it, and you're like, what the hell are you talking about?
Well, we did. I know what you're referring to, because we had a situation where we're trying to balance somebody's accounts in, which are almost really, if they don't get in soon, they'll be late. And the guy's bought some property for several £100,000, but we can't find this payment going out. And he says, well, I've borrowed the money, but we can't see the money coming in. So normally, if you buy a commercial property, you're borrowing the money, it comes into your account, and you use it to pay for the property, or the payment goes straight to the property people. But you see documentation. But what happened here was that this business, this property was repossessed by the bank, and what my client did was merely take over the loan. So there was nothing going through the banks. So we've got this property and we can't think where it's where the money's come from, because it wasn't a deal like that. It was just to take over the loan. That's all. Can
I just say as well, on the BBL, the bounce back loans, because people keep calling them BBL loans, and that frustrates me because it's bounce back loan.
There's been more than one.
BBL scheme. Yeah, there has been more than one.
And then
payments started this month, June, if you're watching out.
Yep.
But people had 3 months warning. So that's 3 months they could have phoned accounts direct and sorted all this nonsense out. So if they're struggling now...
What are you getting annoyed for?
I'm just annoyed.
Like, you've never paid a debt back. You know, I'm trying
here
to.
we go.
I'm just saying, if people are in trouble with it, let's talk. There's things we can do now before it goes too far.
I'm just saying.
And I mentioned employee equity as one way, but it depends on the viability of the business.
Equity, is that like where you
have a share in the business?
Where you hire more black people and stuff like that for better representation?
No.
Well, what?
That's equality.
No, equality is when everyone's treated the same. Equity. Yeah, tret. I'm doing my thing here right now, Hayden. Yeah, can we?
Treated? No, I can't.
Where are we going?
I was being northern.
No,
thank
it's
you.
about shares. It's about ownership. It's about what you own, as opposed to what's owed to other people.
Why would you want employees to own part of your business?
Well,
though,
you
honestly?
don't. But if it's a way of
You don't.
if you've got sometimes if you've got a company that's in debt, but it's a good, strong, viable business, maybe I mean, would you buy into Accounts Direct if I gave you the opportunity?
Yeah, once you're gone. Yeah.
Yeah. Well, there you go. But you see, that's another type.
Once it's stable.
That's part of the negotiation.
Yeah.
That's so you say, well, I'm not buying into it if Stephen's there.
Yeah.
But if he's gone, then I'll put in. I was going to say thousands, but you don't know what that relates to with money, do you?
No.
So
I've got no
I'd put in a few
concept
£100.
whatsoever,
You know, but no. It's just a lot of employers do give staff shares in lieu of wages to reduce tax burdens, but it's also a way of making people more committed. And there's lots of reasons, but you know, a lot of businesses are quite viable. That if they want to sell, instead of selling a business on the open market, they can sell it through some sort of trust with their employees, and it's a tax efficient way of selling a business, and it means that anybody working for the firm has got an ownership within the business without it being, if you don't want to go down the co-op route. Thank you for watching. I hope you enjoyed that. If you want to carry on watching, we've got loads of videos all around us. But if you have more real-world issues and something you'd like to talk about, do feel free to contact me. Just go to my website, stephenenglander.co.uk, fill in the form, tell me what it is roughly you want to talk about, and I'll be in touch. Thank you.